All right, everybody, welcome. This is going to be a refresher webinar, and this is something we're going to go over pound yen during the London session. I think the main thing that we're going to focus on is going to be visualizing the 4-hour time frames and where it can go based on traffic to the left hand side, or looking at the times when there's going to be volume in the market. Now, London session is different because we have pre-London, we have London Open, and then we have closer to pre-New York and New York Open. So we're going to be looking at these three volume times, visualizing the 4-hour, and trying to execute on the smaller time frames like the 30-minute time frame, 1-hour time frame, and maybe the 15-minute time frame. So our main focus is going to be on the 30-minute time frame and the 1-hour time frame. So first thing we're going to do is we're going to bring up some random date over here, random date generator. We're going to pick a random date, and then we're going to continue on with this. So we're going to pick up 10 dates. We're going to go as far as 2020 because we want to stay relevant to the recent market conditions. So March is still fine. We're running in July at this point. We're going to do till June 30th. Only Sundays because that's when the market's really open at this point. And all right, let's get these dates over here. Pound yen, and we got a bunch of dates over here. We got February 2021, August 2020, June, May. Let's do August, 2nd August. We'll do 2nd August 2020. New simulation. Pound yen is probably over here. TrueFX. Oh, not over here. MetaTrader. Oh, okay. Data center. Dukas copy and pound yen. I guess we'll have to download it. Pound yen, where's it? GBPJPY. GBPJPY, download last two years of data. Okay. Awesome. Continue recording. Okay, perfect. If you don't mind, what's your baby girl name? I don't have a baby girl. Where'd you get that from? I have 2 boys. All right, perfect. So data is downloaded. So we're going to go towards new simulation, pound yen. We're going to choose, let's go to August over here. August, 2nd August, pound yen. We're going to start with 5,000 pounds over here. 5,000 pounds, we're going to choose New York close, pip sizes, whatever. Leverage, we're going to go to 1 to 500 leverage. Commission per lot, I think it's going to be standard commission, whatever that is. History on the charts is going to be 100 days. We want to see 100 days in the chart to see what's happening. So, perfect. Let's start this simulation. It's being recorded. Okay, perfect. All right, so first things first, we got to load the charts. We're going to start with the weekly charts. We're going to add the daily. We're going to add the 4-hour. We're going to add the 1-hour. We're going to add the 30-minute, and then we're going to add the 15-minute. So one thing is, when we do the simulation, this is done in one go, right? So I would really appreciate it everyone keeps their questions to themselves, because all the questions will be answered, trust me, because there's a methodological way that I go about the webinars, and all the questions are answered as we go along. So you're going to find that everything that you may have a question about, that will be answered as we move along. So this is what we got: the 15, 30, 1 hour. We got the 4-hour time frame right here. We got the daily, and we got the weekly. Wow, this is way too bright for me early in the morning. All right, perfect. So London session, weekly candle is obviously bullish. The structure here is pretty easy to see what basically happened. Price made a high on the weekly time frame. Price came down. We had a bullish candle. Next candle broke the high and continued on to fill the range. Right. This we've seen happen on the small time frames, 30-minute time frames, 1-hour time frames, that candles do fill the range. So candle patterns, they work on all time frames, right? Which we can see right over here on the weekly as well. Let's go towards the daily. Looking at the daily, next daily candle, it's starting at this point. The previous one went all the way up to fill the range at 139.076. So this may tell us, now this is where you have to visualize, right? You have to visualize that, okay, what's the probability that the next daily candles are going to continue moving bullish, since we had this rejection here too, so it may continue bullish, or due to this rejection we may have some sort of a retracement to form support and then to continue on moving up to retest the high, right? So that's something you should be keeping in mind at that point. So looking on the 4-hour time frame, we can clearly see the 4-hour time frame is rejecting at this point. Where's my plus sign? Oh, I can't even zoom in over here. We have to do this. I have a different keyboard. Okay, perfect. So look on the 4-hour time frame, candle closed at 138.480, but then we gapped below this area. Looking on the 1-hour time frame, kind of like the same gap, right? So now we have to understand, why does a gap happen? You know, a gap happens. So here's what happens. You have the market. Let me try to explain this the best way I can. So you have the brokers, and then you have the market, right? Market sends the orders to the broker, or the market sends the prices to the brokers, right? So when the brokers are open and the market is open, the market is constantly sending prices to the brokers, and then the brokers, they send you prices to your charts, right? Now, whenever there's a gap in the market, right? A gap happens when the broker is no longer having access to the market, which means over the weekend when the brokers are closed, prices are still moving at the same time, right? So when the prices are moving, brokers are closed, so you don't see any price move. So whenever the market opens, the next best price that the market gets is going to be 138.313. This is the price that they're going to give to the broker, and then the brokers, they give that price to the clients at this point, right? Which is why you see a gap in the market. The same thing happens when you have news events. In news events, when price moves super fast, right, the brokers can't handle the fluctuation in price, so whatever best price they get from the market is what they display to you, which is why you get slippage, your stops get slipped. Sometimes, you know, if you're lucky, your TPs get slipped, so you end up making more money, you know. So that's when you have gaps, you have slippages, and you have, like, you know, orders that get executed on different prices than what you anticipated on. So that's why, like, you know, all these things happen when the price moves faster, or when the market is closed and brokers don't know what's going on. And it's very normal. It happens all the time, right? So that's why the gaps happen. So I thought it's going to be pretty important to share this, a little bit of information here. So now, since we have this gap, so now how do we tackle a gap? So on the 1-hour time frame, the only thing we can see at this point is we have sort of like you know, I guess we formed some sort of let's bring this up over here. We got line studies. Okay, perfect. We formed some sort of a support previously, right? Look, candle came down, bearish candle, bullish candle formed, boom, support formed, right? This candle broke support and we continued on moving down. Now at this point we have a gap over here. So looking on the 30-minute time frame, we still got that gap. Now the beautiful thing is that we're not focused on Asian session because this is closer to the Asian session at this point. We're more focused at the London, so that's what we're going to do. So if you go towards sessions, we can see that the London session is going to be around 1000 hours. You can see the time right here, right? 000. London session starts at 1000 hours. So we're going to move on towards 900 hours at this point, which is going to be pre-London. Actually, we're going to move towards 830. So go to the 30-minute time frame, and then we're going to continue on. Move it. 630, 730, 830. All right, this is pre-London, right? This is an hour and a half before London open, and this is when the volume starts to come in, right? So if you look on the 4-hour time frame now we can make some deductions of what's happening at this point. This is supposedly when the live stream starts. We're coming onto the live streams and we're trying to do our analysis, and that's when we see that, okay, 4-hour is creating a resistance at this point, and at the same time we're creating a support right down over here. We're not worried about the prices at this point. We're only worried about where the resistance is and where the support is. The rule of thumb is, whenever you're looking at the charts, you're looking at the 4-hour time frame, and then you're trying to understand that, okay, if I'm looking at the 4-hour, where do I see a resistance formed? And it's right over here. Now when we copy this over to the 1 hour time frame, let's see what information do we get over here. So this is what we get at this point. So let's remove this. 1 hour, we have this resistance. We can see price is just consolidating on the 1 hour time frame, and this is where we have to wait to see what's going to happen at this point. Let's take a look on the 30 minute. 30 minutes also consolidating. Let's zoom in here a little bit. And now what we want to do is, we do know that we have a support at 138,300 and we have a resistance at 138,800. Now we're just looking at this information. We're looking at this consolidation. What we have to do is we have to kind of like, I think it's going to be better to put a minor support right here and measure how far the support is, right? So this is 18 pips away. Let me do scale fix here so that we can move the charts a little bit better. Perfect. Now, just by looking at this consolidation, we have a support, and if we break the support, we have to understand that, okay, if we drop down to the next support, this is 16, 17, 18 pips away. Now, is this going to be enough range for us to take a trade below the support? I think it's going to be enough range, right? Because if we get that volume coming into pre-London, I think this is going to be a better move to take. Now, on the opposite side, if you look at buys, we have a resistance forming at this point right here. And if we break above this minor resistance, we have enough range to go up, 24 pips. We have a question, does the minor resistance count if the price go up? See what I said? Just keep your questions to yourself. The questions will be answered without you even asking them, trust me. Right? So if we break above this area, there's a very high possibility we can continue up towards 138,820. That's it. Simple analysis. Super, super simple. Nothing confusing about it. The only thing we have to wait is for some sort of a candle confirmation. Now, when we look on the 15-minute time frame, let me just clone this over so I can show you the 15-minute time frame. So now if you look at the 15-minute time frame, you can see how messy the 15-minute time frame really is. Yeah, right here, right? Look, so if we break above this area, we have a minor resistance on the 15-minute time frame, which is a wick on the 30-minute. If we break above this area, we have another rejection right over here. So it gets a little choppy at this point. So whenever you're looking at the smaller time frame and it's a little choppy or things don't make sense to you, I'm a big fan of just going up one time frame and just focusing on that because it's much cleaner, right? Because look, all these candles here on the 30-minute time frame, you had a rejection right here, you had a rejection. So even if you get one candle closing above, let's say 138,560 or 138,580, that would mean that that candle is closing above where all these candles, they couldn't close, and that will give us the more confirmation that, okay, now we can continue moving up. And the same thing is true if we close below, so we can continue moving down. But we got to wait for volume, right? And the volume is going to come in with pre-London. If not with pre-London, it's going to come up with London Open. So let's see what happens right over here. So let's play this a little bit. Let's move it up. And let's see what's going on. So we got to wait to see if we get a close or a break above this area. Close or break above this area. Yeah, I think that's going to be a pretty good idea to wait for here. Right now we're just consolidating, we're just ranging within these areas. So let's take a look on the 1 hour time frame. Yeah, just ranging at this point. Because if you do break below this support, there's a very high possibility we can continue all the way down. And this is a really, really big range to continue down. So now, one really important thing is we're not going to be focusing on impulse entries. Impulse entries over here will not work, right? Because if we do go for an impulse entry, we don't know where this 30-minute candle is going to close. Because now you can just look at this and say, oh, well, we're breaking above the previous candle and the previous candle and the previous candle. So this may be a really good indication to take an impulse entry. Wrong. Because look, this 30-minute candle, this was bullish at one point and it rejected and came back down. So this candle, either it has to break the high of this candle right here to go up for an impulse entry, or it needs to close above, what's this price? 138,560 or 570, right? So as long as we stay within, let me just draw this range. As long as we stay within this range, we're not doing any impulse entries. We're just waiting for the candle to close, whichever way it closes. That's all what we're waiting for at this point. Yeah, we're coming up over here. This candle is also about to close, right? Since we got 10 minutes left for the candle to close, even if we do break above the wick at this point, I think it's going to be pretty risky to take the trade because the candle is just about to close, so it's better to just wait for it to close. Let's take a look on the 1 hour time frame. Yeah, 1 hour time frame is still whatever. 30 minutes still bullish at this point. We're closing in about 3 minutes. And let's see how we close on this candle. In 3, 2, 1. There we go. 30-minute candle closed. This is what we want, right? 30-minute candle closed above this resistance, which means it closed above all these candles where they couldn't close. Now, can we take a buy over here? Not at this point. Not right now, right? We need to see if this candle is going to break the high of the previous candle. If we break the high, I think it's going to be a really, really good buy opportunity for price to continue up, and we can have a profitable trade. This new candle needs to break the high of the previous candle. If it doesn't, then there's basically no trade. We're only focusing on the 30-minute time frame and the 1 hour time frame. So yeah. Looks like see now, this is good. Oh, this is not good because it just broke the low over here. If it broke the low, then there's a very, very, very low probability it's going to go up. Now it's going to just continue back down in a range. Oh, wow, look at that. We're coming down in the range at this point. No confirmation to take sells. Now, since this candle is going to close, and the 15-minute candle will also close, we're going to look at the 15-minute time frame at this point. So looking at the 15-minute time frame, so let's do this, right? Let's zoom in over here now. Look at this 15-minute candle. This 15-minute candle closed at the support, right? We cannot take a sell over here. We can only take a sell if we break this low and then continue on down. Now, I know some may be thinking, oh, well, what about this support to the left-hand side? If we have the support to the left-hand side, and if you look on the 30-minute time frame, that's just a candle making an exhaustion wick and then continuing up. You know, so if we do break below this low, just based off of the 30-minute and the 1 hour time frame, we can say that, okay, there's a high probability for price to continue all the way down to this support. Only based on a 30-minute and the 1 hour time frame, because since we've been ranging for what? We've been ranging for 4 or 5 hours. If we do break this range, we will continue down, because what we've learned is the longer the price range is, the stronger the breakout there is, right? That's what we're hoping for over here. So if we do break below the 15-minute, I think it's going to be a good opportunity for price to continue down. Kind of like ignoring this rejection area, because on the 1 hour time frame, it's just a candle going up. On the 30-minute time frame, it's also just a candle going up. And we have to trust the higher time frames, right? We have to trust them because they're stronger confirmations. So let's see how the new 15-minute candle starts. Oh, we're about to break this low over here at this point. Will we break it, or will we just reject it? Will we break or we reject? There we go. We're breaking. But at the same time, we have this wick right over here too. So I'm going to put a line over here as a visual clue, right? We have to come below this level to probably execute a trade. The 30-minute candle is also closing. It's a very delicate situation over here. Extremely, extremely delicate situation. Oh my, look at that rejection. The 30-minute candle is also about to close. There we go. 30-minute candle has closed. Let's take a look on the 30-minute time frame. Yeah, 30-minute candle closed bearish over here as well. So no trades at this point. Nothing. Oh, there we go. We're breaking the low at this point. We look at the 30-minute time frame. 30-minute candle is also breaking the low over here. It's breaking the low of the previous candle. This is where you can estimate that, okay, if we are breaking the lows, what's the probability that price is going to continue moving down at this point now, right? We got a 15 pip range, which, yeah, I think it could be a pretty good idea. So we're going to risk 2%, right? We're going to risk 2% over here. So stop loss is probably going to be above this 30-minute candle because we're breaking the low. We're going to do a sell. Oh, stop loss must be non-zero when using risk-based position. Oh, so we're going to go with visual mode, and stops are going to be above this area right here. And looking at price to continue down to this point. Actually, what we're going to do is we're going to remove the TP because we're going to be focused on securing 10, 11 pips and letting the rest run. Well, isn't that lovely? Okay, let's take a look here. We're about 3 pips, 1 pip, 3 pips, 2 pips, 5 pips. Oh, nice. If we can continue on moving down, I think that's going to be amazing. Now, since we moved up about, 6 pips, 7 pips, 8, can we get to 9, around 9 at this point? Probably not. Retracing. Now, here's the thing. This is what's going through my mind at this point, right? If we're coming down, right? If we're coming down, and if we do start rejecting this area, if price comes back to the break-even point, that's where I'm going to close 50% of my position, right? Because here's the thing. If we were in profit for about, let's say, 8 pips, and price comes back to the entry point, there may be a probability it may continue back in the range, right? So you got to be safe at that point. So I will never let my entire position run in a drawdown. I'd let maybe 50% of the position run in a drawdown. So far, like, we're still below this area. The 1 hour candle is also about to close. We're hovering around this area at this point. I guess if we continue back up to the break-even point, that's where we're going to close about. See, right here. We're at break-even. So I'm going to close 50% right here and let the rest run. And then we're going to see if we can get some, maybe a second chance for this sell, because we are breaking below this consolidation. And if we are breaking below the consolidation, there would be a high probability for price to continue down. So we're going to see how this candle is going to close at this point. Because if we do leave a wick below that range we just broke, then there's a high probability we can continue bearish. Let's wait for the candle to close. And now we're going to be moving in. Oh, wow, look at that rejection. That's a very, very, very strong rejection. Look on the 4 hour time frame, we're bearish, but we're still in consolidation area. Looking at the daily, just by looking at the daily, right? Look, daily went up, made a top wick. So this is where visualization comes into play. If we came up to make a wick before the daily candle, and if we came up previously in the past and went down, what's the probability that this daily candle can also turn bearish? I think there's a very high probability. So now we just need confirmations on the smaller time frames. Looking on the 4 hour, we're just consolidating. Looking on the 1 hour time frame, let's do this, right? Let's scale fix this. And if you look on the 1 hour time frame, we can see how this 1 hour candle had no wick on the top, right? So now we can adjust our zones based on the 1 hour time frame. So look at this. This candle has no wick on the top, which means there's no bullish volume in this candle at all. Zero bullish volume, right? Next, this one, it broke below this area, went straight down, right? So now what's the probability that this candle will also continue down or may consolidate, and probably the next one goes down to first fill this wick and then to fill this wick, right? So that's something we're looking at over here. So let's take a look on the 30-minute time frame. We're still in this trade. Looking at the 30-minute. Now we don't want this candle to break the high of the previous candle. If we break the high of the previous candle, then probably price is not going to go down at all. So we got to be, we broke the high over there. Perfect. See, our risk was 2%. We lost 1%. We maintained our risk at this point. Tough, man. It's very tough. Looks like we're going back in the range over here. London Open, very, very, very volatile. Just crazy volatility. Just got to wait for this 30-minute candle to close. Looking on the 1 hour time frame, 1 hour time frame, it's also, it is how it is, So since this trade was closed, my rule of thumb is just wait for about 30 minutes or probably an hour to maybe look for a second opportunity. So I'm just going to wait for that. We got about 10 minutes left for the candle to close, so we're going to forward it, and then we're going to go to the 30-minute candle close. Perfect. So the 30-minute candle closed bullish, right? Now, this is good and bad, right? It's good in a way, because if we're closing back in the range, and if we break above, let's say, this resistance, then we know we can go up because this move down was a fake out. But if we can get a candle to break the low right over here, then we know there's a high probability for price to continue down to fill this wick and then to eventually continue down to fill at 130 at 200. So that's why this candle, I think this is a very, very good close at this point, wherever this candle closed. So all we got to do is wait to see if we break the low of this 30-minute candle for price to possibly continue down, or if we break above resistance to continue up. So we have two biases right now. So the first bias is just to wait. Waiting is going to give you a lot of opportunities. So you can see, right, we started at 1:30 a.m. Eastern, waited about 30 minutes, took a trade, didn't work out, went into a little bit of a profits, and it is what it is. So now we're breaking the low at this point. Now, if we're breaking the low at this point, we're also moving into a high volume time, but also the candle is about to close in about 8 minutes, right? If the candle is about to close in about 8 minutes, you got to ask yourself this question. And the question is, will price continue dropping in the last 8 minutes, or is this just continuing down to probably make a wick to retrace, right? From my experience, what I've seen is that if we have about, let's say, 10 minutes left, or 8 minutes left, it's probably better just to wait for the candle to close, because if you look on the 1 hour time frame, it's about to close in about 10 minutes. So I think it's going to be better to just wait for the candle to close instead of taking an entry right here and let's just wait for the candle to close. We got 5 minutes left for the candle to close. We also got, I think, oh yeah, the 4 hour candle also has 1 hour left to close. So perfect. Look at this. Look at the way candle closed, right? Just garbage. Look at the 1 hour time frame right here. Not looking too good here at all on the 1 hour time frame. Not looking too good. The only thing we see on the 1 hour time frame, now we just got to trust the 1 hour time frame. This is getting pretty difficult than I imagined, guys. So we had support, candle broke below, next candle closed below support, and if this candle rejects this area, I think we can continue dropping, but we need to see if we're going to close below this area or not. Wow, this is a longer wait than I expected. We're just consolidating over here. Just tough. Very, very tough. We're already 30 minutes into this into the session. Ideally, what we want to see is we want to see a breakout of this consolidation. Once we get the breakout of the consolidation, then we're going to move on to the next session. All right, look at that. So far, we're rejecting that area. We just wanted to kind of reject it and then give us some confirmation if we're going to continue down or not. Actually, let's take a look at the 4 hour. 4 hours still consolidating. Let's take a look on the daily time frame. Let's put a line at the point where daily is going to turn bearish. So daily is going to turn bearish at 138.307. Let's clone this over to a 30-minute time frame. 138.307 is going to be right over here, somewhere right over here. This is where the daily candle is going to turn bearish. So as you can see, London is really, really tricky. The 30-minute candle is about to close. Let's see how this 30-minute candle is going to close. Hopefully, if we can close strong bearish, we can anticipate the London volume to continue dropping. Because so far, we haven't had London session volume. Oh, God, look at that. We closed back in the range. Yeah, now, I mean, nothing. Was it news time when you traded by chance? No, there was no news. Yeah, there's no news. There's no volatile news to kind of take into account at this point. So yeah, it's just being really difficult over here. Look at this 1 hour candle. Broke the high. I mean, The only thing that would make sense is if we break above this range, and then we can take a buy, or we can close like a strong bearish candle, so we can potentially take a sell, and then anticipate volume in the London session to continue driving price. We got about 8 minutes left for the candle to close. Oh, nice. Looks like we're going to close bearish over here. We haven't had volume here at all. We got 3 minutes left, 2 minutes left. Nice. This is what I like. Oh, damn, look at that move. Coming straight down. We got 3, 2, 1. There we go. Candle closed bearish. Looking at the 30-minute time frame. 30 minutes also bearish. Looking at the 15-minute time frame. 15 minutes also bearish. I really, truly think this is the point where we can continue bearish from here. Let's take a look on the 1 hour time frame. Looking at the 4 hour time frame, sorry. Look at the 4 hour time frame, right? The new 4 hour candle is about to start right now. So now you got to ask yourself a question. What's the probability that the next 4 hour candle is going to continue down, keeping in mind the daily time frame? Look at this, right? Keeping in mind the daily about to turn bearish. If the daily turns bearish, I think it's going to do the same thing what we did over here, right? Looking on the looking at the 1 hour time frame, it's the same idea right over here. So this is what we're going to do. If we break the low on the 30-minute candle, we can anticipate a sell over here for price to continue down, because on the 1 hour we are breaking and closing below consolidation, and it will just make sense. And if you do break the low, this is like a 10-11 pip range, and then if we break below this area with volume, we can continue on moving down because we got a bigger range right over here. So we're trusting the volume in the London session to continue driving price, because look, since Asian session we had we had one move in the Asian, and then that was it. Next, we had no volume move at all. Moving to pre-London, no volume. London Open, no volume. Now we're middle of the London session, right? Now we're anticipating volume. If the middle of the London session has no volume, then the volume is going to come in with pre-New York, right? After pre-New York, the volume is going to come in with New York Open. So you got to trust these volume times. So let's just wait to see how we break below this low. All right, so I guess we are breaking below the low. Now this is where a little bit risk comes into play, right? We're 30 seconds into this, right? If we're 30 seconds into this, I think I'm going to be putting in the trust. I think, okay, let's put the stop loss right up over here, above that range. Because here's the thing, if we're breaking below the low, we're trusting the volume to continue driving price down. If price rejects this area, we're not expecting it to continue back in the range, because the volume's coming in. We have a strong volume candle coming down first, and now we're expecting the next one to continue on driving down. That's all what we're doing. We're just visualizing and expecting the next candle to continue driving down, without it coming back up into this range, right? So we're gonna take a look on the 1 hour time frame right over here. 1 hour time frame. This is where the daily candles are going to flip bearish. Keep an eye on the 30-minute time frame. Alright, we're coming down to this wick over here. Once we come down to this wick area, why not wait a few minutes of the new hour before candle starting? Already explained that idea. The 30-minute candle is about to close. It hasn't really turned bullish. Just waiting. 30-minute candle is about to close in 2 minutes. And there we go. 30-minute candle has closed bearish. We've closed below these candles to the left hand side, which means there's a high probability for price to continue down. We look at the way the candles have formed. We've formed a lower high and a lower low, right? We're slowly moving into pre-New York right now, right? So if we're moving into pre-New York, which is going to be more volume, what's the probability that this new candle will also make a lower high and a lower low? So we need to break the previous low of the candle for price to continue bearish. We're up about 5 pips over here. Oh, nice. Look at that. We're about 10, 17, 20. Moved really, really, really quick. So we're going to close 90%. This was a very, very, very tough London session. I'm not going to lie. I'm going to put stops at break even. And that's it. Let the rest run. We're in clean candles at this point now. So if you look on the daily has flipped bearish over here. Wow, this was really, really tough. A lot of waiting around. I think in real market timing, we had to wait around probably like 2 hours, 2.5 hours, 25 pips, 30 pips, 30. Can we get down to this area right here? See, we have clean candles. We should continue down to 137.850 at least, because we have clean candle to the left hand side, and we have a lot of volume here in the market, right? We have a lot of volume. We should at least continue down to this area. Oh, nice. Look at that. See, clean candles to the left hand side. You just got to trust the price to continue down since we have clean candles to the left hand side. Look on the 30-minute time frame. We crossed these areas. We trusted the 1 hour candle to continue driving down. So we're going to close another 90% right here. And onto the 30-minute, we're going to move our stop loss. So we're going to modify, move our stops. Let's move it in the middle of this 30-minute candle in case we continue on dropping. All right, let's see how this candle closes. Okay, perfect. Awesome. So this was the first trade of the session. We waited a long time. You can see this, right? Took a trade here, losing trade, waited for the candle to come down, break below. We talked about volume times, talked about how we can trust the candles to continue down, and took a trade, secured positions, secured more, and we moved down. Let's see how next candle closes. Oh wow, we moved further down over here. This is where your runners continue running, like 40, 50 pips that candle ran, right? Pretty good. Oh, we got stopped out. All right, let's move on to the next session now. All right, let's move on to the next session now. Oh wow, look, we moved right back into the range. Difficult, difficult, difficult. So this is going to be 8:30 over here. 6, 7, and 8. 8:30 right here. All right, let's remove all the analysis here. First of all, we're moving into Tuesday. 4 hour is still ranging, but we got to do fresh analysis all the time. Whenever you come to a new chart, you got to do, you got to do fresh analysis. So let's remove all these zones right here. Go to a 30-minute time frame. Same idea over here. We're going to remove all the zones over here. Man, that was really difficult. So like this. All right, perfect. Right? Let's take a look on the 4 hour time frame and see what's going on. Actually, let's take a look on the 30-minute time frame. Daily time frame. So the previous daily candle closed a week bullish candle. So if we close the week bullish candle, this means there's less volume for price to go up, but at the same time we can go up if we get confirmations on the small time frame. So we can't say whether on the daily we will go up or go down, right? So we got to take a look on the 4 hour and see what's going on. So looking on the 4 hour time frame, it's very clear to see that the previous 4 hour candle closed a weak bullish candle. The new 4 hour candle is kind of like breaking the low of the previous one, which may give us an idea that price may continue down in this range to probably fill the wick down at 138.374. But we gotta confirm that on the smaller time frames now. So looking on the smaller time frame, on the 1 hour time frame, we can see that we did create some sort of a support. We did create some sort of a resistance here. And before we created this resistance, we had a support formed down right here, 138, around 138.500. So let's clone this over to the 30-minute time frame. Looking at the 30-minute time frame, if we zoom in here a little bit, we notice that we created a minor support. And if we break below this minor support, I think there's a very good probability price can continue moving down in this 15 to 16 pip range right here. Now, the only problem is we have all these wick rejections right here to the left hand side, right? We have all these wick rejections here. So we're not sure whether price will continue through these wick rejections to continue down, or are we going to have just a one solid move coming down? That's something we're unsure of at this point. Let's look on the 15-minute time frame. Yeah, it's not really looking too good. So we're going to focus on the 1 hour time frame, and we're going to see whether we can continue down from this point or not. So let's see here. Let's take a look on the 30-minute. Oh, 30-minute is really breaking down. All right, it's cool. It's cool. Straight rejection. 1 hour candle is going to close. There we go. 1 hour candle has closed. And if you look on the 1 hour time frame, let's take a look on the 4 hour time frame. So 4 hour has really broken the low. If you guys have noticed, right, this candle pattern, whenever you have a candle going up and the weak bullish candle forms and the next candle breaks the low, isn't there a high probability we can continue moving bearish? I've seen that on the 15-minute, on the 30-minute, and on the 1 hour, right? I think 2 weeks ago saw that on the 4 hour, didn't execute, and it kind of like worked, and that would have been another big swing trade. So just by looking at this right now, even on the 1 hour time frame, if we stay below the low of the previous 1 hour candle, and if we trust the volume coming in pre-London to continue driving price down, I think we can get that move over here. I think we can get that move because look, we're rejecting a resistance which we rejected here before. Next candle was a strong bearish candle. The one after that was a weak bearish candle, indicating that, okay, if it's a weak bearish candle, price may not go down because, the volume isn't there. And that now we have a strong bearish candle forming at pre-London, which is a volume time unless we start ranging. And we're making higher lows, higher highs and higher lows, So if we can take a sell over here, expecting price to stay below this low and then continuing down, I think we can possibly get that move down, expecting price to make a lower lows and lower highs. So what we're going to do is we're going to do a dynamic risk over here, right? So we're going to enter 1%, and if we break the low on the 1 hour time frame, and then we're going to enter another 1% to make it a total of 2%. On high volume session, if a candle bearish without top wick breaks previous candle wick, can we enter position or wait for candle tops? Yes, you can. So let's do this here. Visual mode, sell is going to be around, I'd say, all right, not too bad. 8 pips, 9 pips sell. Not too bad. We're going to accept this. We're going to go towards trade, remove take profit. So we're just going to expect this candle to respect the high and continue on driving down to the support. And if we have more volume coming into London Open, I guess we can fill this wick down at 138.360. That's the whole idea, right? Also, we're keeping in mind, can this candle go all the way up? Or okay, better question is, what's the probability that this candle is going to go up versus it's going to go down? The probability is higher that's going to go down because of the candle volumes we just talked about. If we're lucky, we can just get a straight drop down. If we're breaking this low over here, this is where we can add a position right at this point, having stops above this candle high. This is where dynamic entries come into play, right? So we had 1% open right here, and now we have another 1% open right at this point. So now total of 2% running. If we reject, get stopped out, then whatever, right? Oh, well, we tried. at least we tried. But this 1% is still open at this point now. Oh, we're breaking the high. Oh, we got stopped out completely blindsided. This wicking is very, very difficult. Turned out to be harder than I expected. All right, that's fine. This is the 1 hour time frame. Just got to see how we're going to close over here. We're about to close in about 10 minutes. London Open is about to start. Let's take a look on the 30-minute time frame. 30-minute candle went back in the range. We're about to close in 3, 2, 1. We closed bearish. Looking on the 1 hour time frame, we closed a weak bearish candle. Looking on the 4 hour time frame, we're still in this area, in this still sell area at this point. I think what we can do over here is we can do some test positions, right? One, we're going to do a test position based only on the 4 hour time frame. And what that's going to mean is that we can open, let's say, a test 0.5. This is what I've been testing for swing trades, right? Only for swing trades. we can open a sell over here with 0.5, having the stops above this 4-hour candle and expecting it to continue driving down, right? This is just a test position on the 4-hour time frame. So now we've set it, and now we're just gonna forget about it. The second one is going to be our inter-session trade. Inter-session trade is going to be based on if we get some candle confirmations to continue down, right? If this candle breaks the low at this point, I think we'll wait, because if we look at the previous London session, right here where we took trades, previous London session had a lot of volatility. Look, London Open started, a lot of volatility. So I think it's better to wait for the first 30 minutes to end for the London Open, and then kind of see where the direction is if we're going to take a inter-session trade, right? So this one trade is only based on the 4-hour time frame. It's a swing trade, but we're looking at an inter-session trade over here as well. Yeah, this is the second time where the London Open wicked us out. So I think the lesson learned over here is to just wait for the London session, at least 30 minutes to end, before making any decisions. So we're still going back in the range over here. Wow. Oh, we're about to get stopped out on our swing position here as well. Probably not. It's still open based on a 4-hour time frame. Pretty embarrassing over here, but we should get that move. All right, the 30-minute candle is about to close over here. 30-minute candle is about to close. 3, 2, 1. There we go. 30-minute candle has closed. Let's take a look at the close. Wow, closed like a weak bearish candle. Nothing happening over here. Nothing at all. Insane. Now, what's going through my mind is, oh, this wasn't going through my mind. What was going through my mind was if we could break the low, we can take a sell. But I guess not. Oh, wow. Just insane, crazy. Consolidating over here. 4-hour candle broke its own low. Crazy volatility over here. Look, we're only up about 0.38%. This candle is also about to close. If we can get the solid close, no over trading, no over trading at all. The main thing is didn't over risk at all. This candle is about to close here now in 3, 2, 1, 3, 2, and there we go. Candle has closed. Let's take a look on the 1-hour time frame. We're closing strong bearish candle. This kind of looks like the same moves we had yesterday. Look, look at the time, 1100 hours. We look at the time right here. 1100-hour candle came strong down. Next one continued on moving down. You know, we broke below this wick and we continued on bearish. This 1-hour candle, it's sort of like looking like the same idea, where we're kind of like, you know, this candle came strong down and there could be a possibility we can continue on moving down. It's just London session. I found myself so confused for a year and don't know why. Yeah, it's just London session. Looking on the 4-hour, we did liquidate and then continued down. Looking on the 30-minute time frame, I really think this is where we can expect price to continue dropping. I really think so. But the only problem is, where will our stop loss be? If we do look at our stops, our first stop is going to be like around 12, 13 pips away, you know, and then if we're kind of like expecting volume to drive price down, we're really expecting it to break below the support, which is a very strong idea, and then to continue down to fill this wick. That's what we're expecting. So I guess let's take it on with a 1% risk, 1.5% risk, having the stops above the 15-minute, right over here, around 13, 14 pips. Seems like gambling, but it's not. We're just keeping in mind what happened the last time, and we're doing the same thing over here today. You know, we're keeping in mind what happened the last time, and we're doing the same what happened here. So I guess moving on to the next London session, we're going to keep these things in mind. Wow, super tough. London session comes out with a baseball bat and starts whacking you around. All right, so we gotta break this low. We're breaking the low. Now, what happened the last time was we broke below this wick and continue down to fill this wick right here. Is this over trading? No, it's not over trading at all. We're still within our risk. You guys have to listen very carefully, right? Took one trade, stopped out, that was okay. Next one was a swing trade, tried that on the 4-hour, that was aside from the intersession trades. And now this is the second opportunity we're giving for the sells. If we're breaking below this low, there's a very high possibility we can fill this wick down at 138.370, and that's what we're looking at this point. We did fill that wick over there. Right here. We're filling this wick right here. We're going to close 90%. Looks like we learned something about the London session here, so let's put stops at break even here first of all. And if we're coming down to fill this wick with volume, we should, oh, never mind. Yeah, we should break this wick at this point now. Let's take a look on the 1 hour time frame. If we're coming down with volume, coming into London Open, we should continue down to this support. Man, just by looking at two sessions, I'm already exhausted over here. It's so much mental exhaustion. Just waiting, wicking around. Yeah, London session is tough. We'll have to get used to the London session. Comparatively, New York is way, way easier. Alright, this candle is about to close. So we're going to see where this candle closes. So we're going to go up 1 bar. Oh, candle closed with a big rejection. But we still closed below this support at this point too. So there's a very high probability we can continue moving bearish. Looking on the 4 hour, wow, look at this 4 hour candle, right? We were correct. We just got caught with these retracements, but the 4 hour really did continue moving down. So this is where visualization, but I guess the volatility on the smaller time frames didn't possibly work. But now when I look at it into hindsight, I think if we took a trade on the 4 hour, the stop loss should have been above the previous 4 hour candle. You know? Yeah, it should have been above the previous 4 hour candle if we took the trade based on a 4 hour time frame. 1,000%, yes, 1,000%. So we're just consolidating here in the 30-minute time frame now. If we're consolidating, now we're going into a little bit of overtime, right? We're moving into pre-New York right now. And if we're coming to pre-New York, we notice we had big move in London session and we're consolidating. If we break below these lows in pre-New York, there's a very high possibility that we can continue down to fill these wicks, and then we can continue down to fill this this range down at 137, you know, 800 if we're consolidating in pre-New York and if we break the support. And we're going to try to see if we can execute on that as well. The new 30-minute candle has just started. We just need this 30-minute candle to close below support. If we can close below support, let's take a look on the 15-minute time frame here. Yeah, 15-minute candle closed with the wick at the bottom. Let's focus on the 30-minute. But our runner is still running at this point. You can see right here, 24 pips, 23 pips. The 30-minute candle is also about to close in 3, 2, 1. There we go. 30-minute candle has closed. The 1 hour candle has also closed bearish. So this looks like a pretty good opportunity for price to continue down. But the only problem is we're at this support over here. So this becomes really, really, really risky to take a sell since we have the support. Because if we do take a sell, you're right, there's an opportunity we can go down. But at the same time, it's going to be very, very risky over here as well. So if you look on the 30-minute time frame, we're closing below this support right now. I guess we can do a test position just to see. So we'll have to wait to see if we break this low to continue down. That's when we're entered. Like, actually, no, like, you know what? We're not going to overtrade. We're just going to paper trade that. So if we break below the low, and we'll see if we can continue on moving bearish or not. There we go. We've broken the low. Now, since we've broken the low, what I was going to say is that, stop, man. Okay. So what I was going to say is that if we broke the low, we could keep the stops above this candle and anticipate it to continue driving down, which I think will be the case because we consolidated, and now the volume from pre-New York should continue driving price down. So you can see how price moved, took some breather, consolidated, and then more volume came in to move further down. And now we're slowly moving into NY Open. So yeah, this trade is still open. 44 pips, 42 pips. Let's close this right over here and move on to the next London session, and maybe pray we're going to have an easier London session. Oh wow, continue driving price down straight to our targets down here. 137,800. Clean candles moved straight down just like this move happened. We had the same move right over here. Beautiful. Just had to hold just a little bit. Had to hold little bit. So now I guess what we've learned from London Open is to just be careful of this volatility at London Open. Awesome. Nice learning. Okay. Let's move on to the next one now. This is Wednesday and 8:30. 7, 8. Perfect. All right. Easy analysis. Easy, simple analysis right here. Right? Let's take a look on the 4-hour time frame. 4-hour also has, oh wow, 4-hour looks pretty clean. The reason I say clean is that if you just look at the 4-hour time frame, you can see this 4-hour candle close above this resistance. And if this 4-hour candle breaks the high, there's a very high possibility we can correct this move and start to go up. 23, 24, 25 pips. Looking on the 1-hour time frame, we're consolidating. If we break above this resistance, very high possibility to continue back up, just like on the 4-hour time frame. If we close below this area, we can come down to fill this wick. Looking on the 30-minute time frame, we are consolidating here as well. So I think we should have a pretty easy move over here. Let's take a look at the news here as well. News is we have no news right here at all. Nothing happening at this point. So all we gotta wait is to see if we flip bullish to continue up, or do we kind of like, stay within this range and just like, kind of like just consolidate here and just go nowhere at all. So that's something we have to focus on right now. Awesome. Let's see how we start on this 1-hour time frame. So far we're just consolidating here, and we got to be very, very careful to see if we do break above here or not. There we go. 1-hour candle closed bearish back within this range, so no trade over here. Nothing. All we got to see if we're gonna break above this area, or are we gonna break below this range. That's all what we're focusing on. Oh, we're coming back. We're coming down over here. Ba, 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 ba. London Open is about to start, and what we've learned is that London Open has a lot of volatility. Now look at this right here. Look at the way this candle is closing at this point, right? We're closing with a strong candle closing bullish, right? If we're closing with a strong candle closing bullish, what's the probability that we're going to continue moving up versus what's the probability that we're going to continue moving down, right? If we're closing above these wicks right over here, right? If we're closing above these wicks, this candle, strong candle with a huge rejection at the bottom, honestly think, looking at the 4-hour right now, I think there's a very, very, very high probability to go up. Also look, 30-minute close with no wick on the top, problem, right? So maybe we can look for price to break above this area, 138,300, above these wicks right here. Right, so yeah, I think that would make sense. So what we're going to do is we're going to place a buy stop right here, right, in case we miss this trade. 138,300, which is like 2 pips away. So this is going to be a buy stop placed. Oh, what's this? Buy stop placed right over here. Stop is going to be within this range. The stop is going to be within this range because if price does break above, we're not expecting price to come back in the range. If it does continue back in the range, then that's probably not a good trade to take anyway. So let's go towards trade, remove our take profit. So this is a very, very simple idea. 1 hour candle closing above this area with a huge rejection to the downside. And if it does get activated, we have clean range going all the way up to 138,500, which is like, 20 pips away. Looking on the 4-hour time frame as well, we got a pretty nice range to go up here as well. So I think, yeah, I mean, it's very straightforward over here. Oh, there we go. It has activated sooner than I expected it to get activated. We're about 10, 13, 14 pips over here. Beautiful. Quick trade. Good thing we can end this session early over here. Put stops at break even and just let the rest run now. Let's see how far we can go. We're coming up to this rejection area. Look to the left hand side. This was a rejection area. So I think this is why we're rejecting right here. But if we do break above this area, I think we can continue on moving further up. Oh wow, look at that. 24, 25 pips, 26 pips. The candle, okay, let's just leave it open at this point now. Because we only have a runner running over here now. Looks like no volatility, nothing, just straight move. 24, 28, 30. At 30 pips, I'm going to secure some more. Just got to get up to 30 at this point. Probably not. Probably rejection over here too. Whatever. Nice. Very, very nice. Very, very pleased. Very pleased with this move over here. So if we get stopped out, we get stopped out. It is what it is. Let's see if we have any news. We have no news. We have, oh, some yen. Oh, okay. Kuroda speaking over here. Whatever. Oh, damn, Daniel. Look at this on the 4-hour time frame. Coming straight down. 1-hour candle also coming straight down. 30-minute. Look at that. Straight rejection. Yeah, this is the volatility we don't need. Alright, let's see how this 1-hour candle closes. It's going to close soon over here. Let's see how we close. And 3, 2, 1. There we go. Now, this is where it gets very interesting, right? So if you look at this area, if we look at the way this candle, so this 1-hour candle went all the way down, huge rejection, and went all the way back up and closed like a bullish candle. Now, the question is, if this was a huge rejection, will it continue moving up to fill this wick, right? Or will it go back down to fill this wick down over here? But it can't fill this wick because price tried closing back within this consolidation, right? So all this area was your consolidation right here. So price tried closing back into this consolidation, but for some reason it rejected this entire area and closed back above in this clean traffic to the left hand side, right? So this is how you got to tell stories, by looking at the candles. Now, okay, what's the probability it's going to go up versus what's the probability it's going to go down? Looking on the 30-minute time frame, you can see 30-minute candle went right back down, went right back up. So if it's doing these maneuvers over here, we're just, yeah, looking at the 15-minute here as well, I think there's a very high possibility we're going to continue up to fill this range, right? Very, very high possibility. If you look on the weekly time frame, this is what happened on the weekly right here. Look, price made a high right here, price came down, bullish candle, bullish, went up to fill this range, right? Looking on the 15-minute time frame, exactly the same idea, the same concept. Price went up, made a high, came back down, bullish candle. What's the probability it's going to go up versus what's the probability it's going to go down? Simple as that. But now the question is, where will your stop loss be if you're looking at that situation, right? So since this is going to be a test trade, so we're going to go with the 0.5% risk. Oh, one sec. My son came in here to see what we're doing. Hey, buddy. All right, let's do this. All right. So since it's going to be a test one, so we're going to go with 0.5. We're just testing it out, right? 0.5, moving on to 15-minute time frame. Market order, this is a, is this visual mode? Visual mode is on, okay, sell. No, 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 no sell. We're buying. We're buying. Stops are going to be, I think, right here would make sense because we're not expecting the next candle to continue driving down. We're expecting it to continue up, right? So whenever the stops are going to be above, let's say, 20%, because if we measure this range, right? If we measure the candle low, this is 28 pips away, right? So whenever I see stops are going to be 28, 29 pips away, I make it an intuition and I'm like, okay, if we're going to continue up, if there's a very high probability for price to continue up, instead of having stops down at 28 pips, I think it would be better to have it within, like, 10, 12, 15 pips, right? Just by using intuition that, okay, if price is going to go up, we're not expecting it to retrace all this way down and then go up because we have strong candles moving up, right? And we already did a retrace on the 1 hour time frame here. And even if we break the high of this 1 hour candle, I think it would make sense for price to continue up to fill this wick. And if it moves up further, then it is what it is, right? So yeah. Move stop loss 3 pips lower. It's okay. Oh. It's only 0.5, like it's nothing major. Oh, we got stopped out. How'd you know 3 pips lower? How did you know 3 pips lower? Yeah, the 1 hour candle is about to close. We should continue up to fill this wick over here. So we're up about 4%. Pretty good for the week so far. Only Wednesday. Nice, right? Worked out perfectly as we expected. 30-minute time frame. Next 30-minute candle broke above the high. 1 hour time frame. Straight moved up. Looking at the 15-minute time frame. Oh, we did come down a little bit and then moved up. Okay, that's okay. All right, so let's move on to the next session here. Oh, holy, we continued further up over here. Let's move on towards the next, which is going to be at, at 8:30. Let's do this. Moving on towards 800 hours. 6:30, 7:30, 8:30 right here. Okay, we're still consolidating. Let's take a look on the daily. Daily is consolidating at this point. You can see how the daily candle is closing below the previous bearish candle. Looking on the 4 hour time frame, let's remove all these analyses here. Let's remove all these analyses. Let's look up. We have resistance right here. We have support at the bottom. We're consolidating. We don't know where price is going to go, so we're just waiting to see how we're going to open at this point, right? Let's take a look on the 1 hour time frame. 1 hour, obviously, we have a support formed at the bottom, and we have a resistance right over here. This is, again, pretty easy analysis. We have resistance. If you break this resistance, very high possibility to continue up to fill this wick and then continue on towards 138.960. If you break the support, obviously we can continue back down towards 138.260, which is like 20 pips away. So pretty simple idea. Just gotta wait again, just like previously, to wait for price to break above this area or break below this area to continue down. All right, let's just wait to see how this 30-minute candle is going to close. Waiting. A trader's life revolves around just waiting for the candles to close. That's it. That's all we do. Someone asked me, so as a trader, what do you do? We just wait around to see how the candles are going to close. So let's take a look on the 4 hour time frame. It's still coming down. Looking on the 1 hour time frame, we're still kind of like consolidating at this point. So we're going to see whether we're going to close below to continue down, or are we going to maybe go up, or will this session just going to range? Can we use mic session like this or not? Mic session? Probably not, because if we do mic sessions, then this session is going to be longer than what it is timed for. That's why. All right, we're trying to break up. 30-minute candle went straight up, so we got to wait for the candle to close at this point now. We got to wait for this 1 hour candle to close. Waiting for the close is really, really important. Taking impulse entries at this point is going to be very, very, very risky, I would say. Oh, wow, man. Straight moving up over here. Crazy. Coming up towards this session. Could not have taken this trade in any way at all. 30-minute time frame is also coming up over here. So now what we got to see is if we do break above this resistance, how far can we go up? We can come up to fill this wick. 139, 160, 200. Yeah, 139, 200. That could be a pretty nice idea. Let's clone this over. 30-minute candle has closed. Let's take a look on. All right, let's take a look on the 1 hour time frame now. Okay, so we went above the recent resistance. Looking on the 30-minute time frame, we also went above this resistance right over here. If we're moving above these resistances, we have to ask ourselves that, okay, what's the possibility, or what's the probability we're going to continue moving bullish? So let's take a look on the 15-minute time frame here as well. Right, so now if we can create a support over here, I think is going to be a very nice opportunity. We can continue moving up because we had a strong volume candle coming up. And whenever you have a strong volume candle starting at like a session open, this means that there's a high probability for the rest of the session to continue in that direction. That's what basically what I can see at this point. So I guess we'll have to wait for the 30-minute candle to close over here. Oh, wow. Could we have taken an impulse entry? Probably not, because the range is like 10 pips away. Wouldn't have made sense at all to take an impulse entry. So let's just wait for this hour candle to close. No FOMO, nothing. No FOMO. You gotta tell yourself all the time, Raja Banks, no FOMO. Raja Banks, no FOMO. No FOMO. So just gotta wait for this candle to close. Got about 10 minutes left. So we're going to skip Friday, and we're just going to do this last session over here. I just figured I have an appointment here. What time is it right now? It's like 9:30 a.m. Pretty early here. All right, so let's take a look on the 1 hour time frame. 1 hour candle is rejecting this area. No indication or confirmation of a buy at this point. Obviously, if we're going up, we need to see some sort of a support formed to give us an indication that, okay, we can break above this resistance. So far, we're in this range, in this 22 pip range over here, right? Let me draw these blue lines here. One blue line goes here, one blue line goes right over here. So we're within this consolidation area right here. So we got to wait for some sort of a support to be formed. Obviously, this candle means there was no bearish volume since it has no bottom wick. So we kind of gotta have to wait over here as well. See, we're breaking the low over here as well, so it's important to wait to see how this 30-minute candle is going to close. All right, let's take a look on the 15-minute time frame. We may be getting that confirmation. Look, because we're consolidating, we are consolidating at this, almost at this resistance area. All right, 15-minute candle has closed. The 30-minute candle is also about to start over here. No, the 30-minute candle hasn't closed yet. So can we take an impulse entry right at this point, keeping the stops based on the 15-minute time frame and expecting price to go bullish? Looking at the 1 hour time frame, we are moving up. We are breaking above this high. Can we get that done? I think so. Let's take a sell over here. Oh, no. Let's take a buy. We're looking at buys, right? Oh, hold on. What's happening here? Sell. We gotta close out the sell. Actually, let's go back. My bad. We have to go back one candle. A little bit of a cheating, but you know, that was an honest mistake. So we gotta wait for the 15-minute candle to close. Can we replay this live? Like recording? You can watch the recording if you want. but you can't go back and replay this. I don't think so. Okay, so we broke the low. If we broke the low, technically we should have went down, but we're going up, which means there's a high probability for price to go up. So let's just wait. This 15-minute candle is about to close. Let's take a look on a 30-minute time frame. We're going to take a buy as the 30-minute candle broke the high right over here. So we're going to take a buy. Stops are going to be kept below the 15-minute candle. Let's put it right over here, around 17 pips away. And let's go towards trades, remove the take profit. Let's take a look on the 1 hour time frame. 1 hour time frame looks okay. So straight rejection. Oh man, it's straight down to 3.5%. Alright. So we'll just wait for the 1 hour candle to close. So this is again volatility coming into London Open. London Open is tough. So now just going to sit back and wait for this 1 hour candle to close. Yeah, I think it's going to be a better idea to just sit back and just wait for the 1 hour candle to close. It wasn't the best trade. Yeah, I agree. But I do think we should continue moving bullish. Even looking on the 4 hour time frame, we are closing above these areas. We're breaking above this wick. We're breaking above this wick. Our target is this wick to the left hand side. This is our target. This is where we want to go. But we need that confirmations here on the smaller time frames. Maybe if this 30-minute candle can close bullish, we can get that confirmation. Whatever. 138, 830. Yeah, still open at this point. All right, we're about to close in 3, 2, and 3, 2, 1. 3, 2, 1. There we go. This candle has closed bullish, and I guess let's take a look here. So if we keep this support in mind, for London, I think we should wait for the move to happen. Then 1 hour London Open price will calm down and show us the trade. Yes, so I think this is where the trade is being shown to us. 4 hour candle is open at this point. Now this is the last hour for the 4 hour candle, right? You need to take a look at this time. It's 1100 hours. The new 4 hour candle is going to start at 1200 hours, right? So now the question is, will the 4 hour candle continue up to fill this wick in the last hour or not? That's the question, right? And if the answer is okay, it should do that, we got to look at it for some sort of a confirmation, right? So we look on the 1 hour time frame. 1 hour candle closed bullish, had a rejection from the resistance here. But if we look at the smaller time frame, small time frame show us that we had a strong bullish candle up, moving above this area. Next candle closed above. All right, let's remove this blue line. Next candle closed above this resistance 138.720. And then now we're looking at these candles. What we can see is that we had this candle closed bearish, right? Which meant that we're rejecting this resistance, so we should go down. But no, next candle closed bullish. It closed above 1 candle, 2 candle, and 3 this bearish candle. So now we're saying, okay, if we're moving into a high volume session, what's the probability that this candle will respect the low of the previous candle and continue moving bullish, first to fill this wick and then to continue on towards, 138, 200 to fill the 4 hour wick, right? That's the probability. But if we want to take a chance, our chance is going to be that, okay, as long as we respect the low of the previous 30-minute candle, we should continue moving up. If we break this low, then it's going to be losing trade, and then we're going to end our week, and it's going to be, okay, yeah, whatever, we tried, and it was all okay, right? So that's what we're expecting at this point. We can't look for an impulse entry because this wick is just way too big. Just way, way, way too big. So we're going to put it a little bit lower over here because we got to take into account the spread too, right? Because look, this is like 3, it's pretty good. 10, 11 pips, pretty good. Actually, move it here. We are, this is 0.5. No, we want to use 2%, our normal risk. So we're going to add another one right here. Take a look at the trades, remove take profit. So yeah, perfect. Let's put on, whoa, came further down over. See, that's what I was talking about. Let's take a look on the 1 hour time frame. 1 hour is looking good. Let's take a look on the 15-minute time frame. 15-minute candle is about to close. We need this 15-minute candle to stay bullish. If it goes bearish, we're going to close 50%. Let's take a look at the trades. We're about 5 pips, 6 pips, 9 pips, 10, 12, 14. Okay, right here we closed bullish. This means there's a high probability for price to continue bullish. So what we're going to do is we're going to close 90% right here. 90, that stops at break even, and we're going to close partials right here as well. We're going to close 90%, put stops at break even, and let the rest run. Let's take a look on the 4 hour time frame. This is the power hour now for the 4 hour time frame. In this 30 minutes, in the next 30 minutes, we should fill this wick up to 139.200. Oh, we're coming up 180, 100. Ooh, we did look at that. We came up to 139.200 at the last hour, at the last 30 minutes of these candles right here. So we're going to close our bigger position and leave the stops running on the smaller one. Probably modify these stops, bring them right below this 30-minute candle. Because if we do continue moving up, we need to trail our stop losses. Nice. Was there any news here? Oh, there was some small news over here. Oh yeah, construction PMI. Yeah, look at this. Construction PMI came good. They were expecting good news. The trend was bullish. Candle confirmations were bullish. And news really pushed price up over here. Awesome. Worked out to exactly the way we wanted it to work out. Still that wick down before move is wild. Yeah, it is wild. So that's why I kept the stop a little bit lower, knowing what happened in the first, like, Monday and Tuesday sessions. Right? So yeah, it's pretty nice at this point. So let's see how we're going to close. Are we going to get stopped out, or what's going to happen over here? We're coming into, so this is the start of a new 4 hour candle, right? Look at this. So now there's the probability it can just reject and go down, which we don't know what's going to happen at this point until it happens. 30-minute candle closed like a week. Now look at the volume of these candles, right? If we're just looking at the looking at the volume here, we can see how we had strong bullish candle, weak bullish, weaker bullish. So now the volume is dying to go up, So I think at this point we should kind of like retrace and go down. So with that said, I'm going to close this last position and just call it a day at this point. Let's take a look over here. Let's take a look at history. Where's that? Trades? Oh yeah, trades right here. History. We had a bunch of losses too in the beginning. We had a bunch of losses right here, and pricing continued. And then I guess we managed risk here as well. Let's take a look at the stats. Stats are also good. Gross profit $500. Gross loss was like 200 maximum and minimum. Had a little bit of a retracement on the equity curve, and then continue on up. Pretty nice. So thank you everyone for showing up. I really appreciate it. You guys took the time at nighttime. Some guys came in at very early in the morning. Finished the session at about 6%, which is good for the week. So this will be placed in the database probably in the next 4 or 5 hours. And awesome, man. We'll see you guys tomorrow morning for the London session. Take care.